Good morning, ladies and gentlemen. This is Clueless 8, and this is the pre-market AM report. I believe an important one, in my opinion, for February 23rd, 2016. Exactly as I forecasted weeks ago, and as recently as from the lows from 2 weeks ago, the Thursday lows, that the market would basically climb and do a pattern symmetrical move up to its testing the 1950 or so level on the S&P 500. Pattern symmetry is key. There's a lot of people out there who dismiss it as just a figment of a technician or a market chartist's imagination. But the reality is, which is quite simple, that patterns and structures in markets are basically manifestation of human behavior in the form of price action. That's really what it is. Every price action that you see on these charts, which either make thousands and thousands of dollars for traders or losses of thousands of dollars for traders, multi-millions, if not billions, for institutional players, hedge funds, algo HFT shops, and things like that, or more in the hundreds of millions, I should say. The reality is that every single candle, every single structure is a manifestation of human behavior, which are propagated through trading, and in the case of the algorithmic high frequency trading programs, hyper fast trading in the markets. The bottom line is every structure tells a story. And the key is it takes years to understand. Okay? It takes years to understand how the game really works. And even when you understand it, you have to adapt and learn something new. What I try to do here in my service, very, very importantly, and for many of you who are new, should listen to this carefully, is not to basically spoon feed you like a little baby so that you never know how to eat on your own. I go ahead, very transparent, show you some of the methods that I use in order to determine how to manage my trades in a volatile market, or any market for that matter. Okay? And therein lies the term MYOT, manage your own trades. I put terrific entries both on the long and short sides. Most recent example was last Friday when people were freaking out over a consolidation channel, which was basically these two red bars, and the rewards were had yesterday. It's just the way it is. Bottom line is, try to put some of your own skin in the game in the form of money in trades, whether or not you like the trade, not like the trade. If you think that you want to learn something, like I say, and it's not just a hypothetical thing, buy one share of a stock so you at least get to know the price movement, at least get to know that person, right? Like they say, that's just the way it is. Let's move on. So here, this is what I see. We have the pattern symmetry is very clear. August 24th, September 29th, January 20th, then the Thursday lows at on or about the 10th, what was it, the 11th of February. So it's pretty clear. This is where we are right now. There's a lot of people out there who still think that we are going to go and just crash and burn immediately. Look, I still think there's a very strong possibility that we come and test the 1800 1790 level. Keep in mind this is the E-mini S&P 500 index futures. These are the futures chart that I'm showing you. So add about 5 or 6 points or so to these numbers to arrive at a S&P number. The reason I show this because this is more transparent, this is more fluid and more liquid and easier to explain. If you don't know what the backdrop and the background is while you're trading in this type of market, you're trading blind. And many of you know that firsthand. Yet, what shocks me is there are some of you, I should say some of you, who refuse to take this step up and really understand and spend a little bit of time and energy to really learn and understand these particular charts. Anyway, it's you learn from your mistakes and you keep on doing the same mistakes, and that's why a bunch of people drop out. It's the way it is. Quitters in this business don't quit because the market's a bad place. They quit because their brain is a bad place, because they don't want to adapt, they don't want to learn, they don't want to do the hard work. And that's what it is. Anyway, enough of the behavioral stuff. So here we have, let me just zoom in. Here we have a severe bottleneck. You can see that. Imagine this. There's the bottle. There's the bottleneck. Let me get the drawing tool. So some of you are not seeing this. There is your bottleneck, right? So there's a message in the bottle. There is a message in the bottle, except the markets will never raise a green flag or a red flag and tell you, okay, this is when we're going to go down another 200 points, or we're going to go up another 200 points. It's for me to try to determine within reason what might happen. This bottleneck is going to be resolved one way or the other. There's a couple of positive things going on, then I'm showing you the negative things. So here's the positive part. Look at this blue line here. This is the Bollingers. Look how it's sloping up. Look. Just use visual stuff, okay? Forget it like being a rocket scientist. Just use your brain and your common sense a little bit. So here's your Bollinger. Here's the mid Bollinger. What does it look like? Okay, the lower Bollinger is kind of flat, but the mid and the upper Bollingers, which are starting to drag up. Now, there's always a tendency between traders and the media and a lot of the idiots on CNBC and Bloomberg that talking heads that a big move has to come. Like, oh my God, this is either the end or all. It's not. The markets are trading in a range. Okay, and the machines know that. They adapt fast and they confuse and they do all kinds of stuff. We've all been victims of that. There's nothing new on that. So looking at this, if you scroll up, so you can make a common sense a case that we're going to head up towards and break above this red line here, which is a 50-day moving average. And we're going to move up towards the 1957 to 1960 level on the E-minis. That's around 1960, 1965 on the S&P 500. That's a logical move. Keep in mind, this is a pattern symmetry that's going on. Okay, we are at that 1950 S&P move level here, which has been talked about extensively. I've also said in my previous video cast, but everyone mandatory has to listen to, that every time you hit this top, this resistance, it's not that the resistance starts to get slightly weaker. It doesn't mean we can't have a consolidation flag, which I can assure you will scare the living daylights out of many of our members who are unfocused and undisciplined. And will excite members who are focused and disciplined, because this will give us another opportunity to buy some of our choice stocks, maybe 15, 20, 30 points lower. This consolidation flag, in my opinion, could start from slightly higher levels from here, there. And that consolidation could take a slightly nasty bent by going and testing this channel, this magenta line here you're looking at, which I'm extending right now. Okay? Somewhere in the 1880 level. In the meantime, this will get reset, because right now we are in overbought territory on the daily and moving sideways, as I had mentioned might be the case in one of my video casts from last week, from the lows. So this will allow us, this consolidation channel will allow us to basically reset down, which would be perfect. In the meantime, the McClellan asks, okay, so let me stick to this. So moving here, you can easily fall 100, 200 points from slightly higher levels. At this point, from what it looks like, you can see it here, it looks like they want to punch out and show that they can cross over the demilitarized zone, or if you want to look at it, no man's land of the 50-day moving average, which is around the 1950 S&P level, 1943 or so on the E-minis, and move up towards the upper Bollinger. There is an acceleration band up here in 1988, 1990, which is still a possibility. Now, some of the technicians, and I posted an excellent article, and these are people you don't normally see on TV, said, hey, we could even get to 2000. Well, lo and behold, look at the Clueless Day trading chart. You could get to 2000. What does this say? It says 2000, 2003, 2004. That's about 2010 on the S&P 500. These channels were not drawn because I copied somebody. These were drawn because of what I do. So try to focus and understand and learn. Sign up for the group advanced group coaching sessions so that I can teach these things to people who just don't get it. Help yourself. I don't charge exorbitant prices. I don't go around fleecing people. I just basically put a minimal number in there to cover the cost of what's going on when it comes to the advanced coaching sessions and my service. So Anyway, so I can draw another line here, which would be like this. And that would be around 1965. So looks likely here, given the shape of this, it looks like a bull flag that we are going to hit up there. So if you want to make some good money, in my opinion, in between the volatility, and unless the bottleneck is broken below the 1924 level, you can see that this is the lower end of the bottleneck right there, below the 1924 level. That's when the 34-day retest comes into play below 1900 again. Unless this gap is not traversed, we are going to go higher, and you can make some decent 20 points or so or more on the S&P calls. Doesn't mean that they're going to make it easy. But remember, there's a seasonal factor involved. I've said it a zillion times. I'll say it again. We are coming towards the end of the month. End of the month, window dressing is a powerful force that knows no limits. They will chase stocks just randomly, just to show it on their portfolios and their books. It's called chasing alpha, chasing beta to add alpha. In other words, high beta momentum stocks, adding them to show outperformance in the form of alpha on the portfolio manager's books. Mutual funds and stuff don't really care what you and me think. They want to save their jobs. So they want to show some powerful stocks in there. In the meantime, any type of consolidated pullback in the form of a consolidation channel and things that I just showed of these levels are welcome, in my opinion. Now, oil is a big factor. We have the oil cartel guy, Al Naimi. I've been talking about this, the Saudi guy, one of the most powerful guys in the world, talking in Houston, in a conference. He's actually directly meeting the people that he helped destroy, which is the shale oil industry. So, you know what? They're civilized people, but I'll tell you, it could get hot and heavy in there. And the bottom line is that I don't think he's going to, say anything that positive about oil. Whichever the case, oil is holding a bid, but it's down about 63, 64 cents right now, which is pulling down the market. And DWTI, as you know, has been a phenomenal trading instrument for us. I don't want to get into how many shares you need to buy, but buy one share so you can see those 70-point moves and say, I was in it. Mental confidence is what creates winners and successful, consistent traders in this game. When your mind is shot, you're finished. It doesn't matter whether you have a $1 million trading book or a $10,000 trading book or a $1,000 trading book. Remember that. Okay? It's all in the mind. I've been there. I know it. I fight it every day. You're talking to the real deal. So that's basically it. I've explained the scenarios, very clear. A reset would be very welcome. You can see here very clearly. I only have about 2 minutes. I'll show you the short-term picture. As you can see here, as I said it a zillion times, overbought. It doesn't mean we need to crash and burn all the way down to oversold territory, but it looks likely. Okay, that we might come and test. This is the VWAP. It's not today's story. We could easily have a 100-point pullback down here, or we move up quickly. But you got any fast move in the market, in my opinion, on a risk quantification basis needs to be faded. In other words, profits need to be locked in, and some runners maybe stay in there, but we need to short the market if we make a fast move up, because by that time it will be so severely overbought. But in the meantime, you might have a negative divergence. Markets could be moving up while you have a negative divergence while this is starting to fall. Or it might just do this and move on sideways as we move higher. That's a strong possibility because of the seasonal factor that I just explained to you on the end of the month window dressing. That's really in the works right now, because the end of the month is in play. And if you look at the date count, you're going to see that we have 1, 2, 3, just 4 trading days left for the portfolio managers to stuff their books. That's it for now. Thank you for listening. Sign up for the coaching classes, and God bless. Congratulations, everyone, on all their winners. And again, losing is just part of the winning game. Thank you for listening.